So this is chapter 12-6. We are posting totals to a general ledger, which we've posted to a general ledger before. That was chapter 5. We went through the general journal. We posted every single transaction to a general journal, or general ledger, sorry. So now we're talking about posting totals to a general ledger. So we focused already on this chapter on posting the vendor and the customer accounts to the subsidiary ledgers. So now we have to go post things like the accounts payable and the accounts receivable totals to the general ledger. So our objectives are listed and our main one is to post journal totals to a general ledger. All right, so posting totals of a sales journal to a general ledger. This is our sales journal, right? These are our general ledger accounts, accounts receivable, which is a controlling account, sales, and sales tax payable. So Keystone Corner, if we look, we've already posted to Keystone Corner, right? We posted sales to the Keystone Corner, Keystone Corner. And these people owe us money. This was one of our customers. So we went and we posted the accounts receivable ledger for Keystone Corner. So our procedure for posting to the general ledger from the special journals is a little bit different. If you recall, in the 12-5 lecture, I said it's very important that you guys listen to what I was saying, that now we're going to go in and post the accounts receivable debit, the sales credit, and the sales tax payable credit. These are all general ledger accounts. And if you have any doubt about it, you can go look at the chart of accounts. You can hear the dogs play fighting in the background. You can go look at the chart of accounts and see which ones are in the actual general ledger, which is going to be your balance statement accounts and your income statement accounts, and which ones are subsidiary, which are going to be your customer and your vendor accounts for accounts payable and accounts receivable. So if you notice on the sales journal, we have these totals already, right? Well, this came from, I believe it was chapter 10 where we talked about this, where you total... Okay, with no dogs in the background now. Where you total up each of the special journals at the end of the month, right? So this is the end of the month, clearly. It's a month with 30 days, so you know that it's the in-between knuckles if you do the knuckle trick, haha. So we totaled each of those journals, and we wrote the totals right here. So this last one, this is the last step in posting, but they already have it there, so don't pay attention to that. You're going to total your journals per usual, right? So they're totaled. We know what's in them. We checked the equality of our debits and our credits. They match. Remember that little section in our workbook that we had in our Excel file? We had underneath where we put in all the debits and we put in the credits and make sure they totaled. That's what we did. Okay, so everything matches, right? We proved all our special journals. So now we're going to post them to Ledger. First thing we do is we write the date. So we go through and we write the date for all of the Ledger accounts that are affected. Accounts receivable, sales, and sales tax payable. So we write the date, which is the 30th of whichever month this is. Oh, it's November. We can look right here. It says it's November. Okay, so we write the 30th for November. We write the journal page number. This came out of the sales journal. It's page 11. So we're going to go put S11 in each of the post-ref columns. We are going to put the column total. When we say column total, we mean this column total. So we come in and we say, okay, accounts receivable debit. We had $11,066.40. So we come over here to the debit column and we post it in the debit column. See, accounts receivable debit, accounts receivable debit, debit. So we take this $11,066.40 and we post it to the accounts receivable account in the general ledger. And we do that for each of them. Sales credit, we can post it in the credit column. Sales tax payable credit, we can post it in the credit column. Next step is that we calculate a new account balance, right? This is our balance column. This is what we use ledgers for. They have all of our balances. So for the accounts receivable account, we take our $9,540 debit. We add our new debit, and this is our new total. Sales, do the same thing. We had a credit balance. Why? Because it's normal balance. We add the credit that we just posted. We have a new balance. Look, do you notice that the balance is on the same line, right? Some of you guys do some weird stuff where you add it, then you put it down here or down here. You add it on the same line as the new transaction. We look at sales tax payable. We had no balance, right? Ching, ching, no balance. And then we had a credit for $626.40, and that's our new balance. And the last thing we do is that we go and we write the account number for each of these under each column that it's for. So we say account number 1130. We come over here below our double line rulings and we put 1130 in parentheses. This right here tells us that this was posted to the ledger. If you don't have this, then I will assume that you didn't post the ledger, and I won't even go look at the ledger, and I'll just count it as wrong because you didn't post it, right? It's not in parentheses. Why would I think that you wouldn't post it when I'm grading your papers? So that's posting totals of a sales journal to a general ledger. We have 3 more slides that are going to look a whole lot like this one, so I will try to run through them fairly quickly. Purchases journal to a general ledger. A difference in this one is that we have 2 general ledger accounts for this one. We have purchases and we have accounts payable. Now, we already posted to the accounts payable subsidiary ledger for Accent Importers, but we didn't post to purchases and we didn't post to accounts payable. And if we have any doubt as to what we posted to, we can go look in our chart of accounts and see what account is 210. And I'm pretty sure it's going to be the Accent Importers account in the accounts payable ledger. So we do a very, very similar process, right? We come up here, we write the date. Here's our date. And apparently we had multiple transactions that we posted here because there's a blank line, but this is the first. And this line tells us that they just removed part of this ledger account. Okay, so we go through, we write our date first. Second step, journal page number. This is from the purchases journal, page 11. Here's a purchase journal, page 11. So we can look at this and know what happened to cash payments journal, page 21. We had a debit to purchases, so we paid cash for this one. Phoenix is talking about a breakfast. And remember, we've already totaled these journals. We went through and we totaled them all, but it's part of our end of month procedures to total all the special journals. So we write our column total. Well, we come up here. Guess what? We have the same exact column total for purchases and accounts payable. So it's going to be the same one, $17,148.08. So we write that. But, oh wait, purchases, it's a debit, right? It's a cost account. That's how we increase our cost account. Accounts payable is a credit. So down here, we're going to put our credit. And you want to guess the next step? We're going to total them, right? We're going to calculate our new account balances. So for purchases, we had a debit balance. We have a debit transaction. We add those together. Our new balance is debit. This is the normal balance of a purchases transaction. Accounts payable, same thing. We had a credit balance. We had a credit transaction. We total them. Here's our new balance. And the very last thing we do is that we need to do our post ref, right, our account number. So we take our account number. Hey, do you guys notice that purchases has no account number? So it's not there. Whoever opened this general ledger page did a terrible job, and they didn't write the account number for purchases, and they should be written up and reprimanded immediately, right? Good thing it wasn't me. It was the publishers of the book back in the 1800s. So if we don't have this account number, what you would do is you would go look it up in the chart of accounts, and then you would write it here so that it's there, so that it's correct. And it's 5,110, by the way. We know because it's posted there, but we wouldn't know that because we had to do this. So we're going to take our account numbers, we're going to write them under. And the thing that's different about this is we had to write 2 in one column. So hopefully there's enough room in the Excel journal, the Excel pages for this, the Excel columns. If there's not, of course, we could just make them bigger by going between, whichever column this is and making it a little bit bigger. So I know so far the book has us do each step, it's kind of like an assembly line. Write all your dates, write all your post drafts, write all of your your column totals. I don't like to do it that way. If me doing this, I would do this one by one because that's just the type of person that I am. That I would go through and I would do each ledger by itself. So, and it's up to you, just as long as you're consistent and you finish all of the steps. All right, so cash receipts journal. Cash receipts journal has 4 special columns: accounts receivable, sales, sales tax payable, and cash debit. And remember that these are the special columns because these are the most frequently used columns. So we've already totaled them as part of our end of month procedures. Our totals exist. And I know this is going to be shocking to you guys, but we use the same exact procedure. We write our date. Here's our dates. We'd write our journal page number. It's going to be CR11 because it's cash receipts, page 11, cash receipts, page 11. And it tells us which ledgers to go post to. Accounts receivable, which accounts in the general ledger we should post to. I need to make sure I'm more specific since we also have our subsidiary ledgers now. So it tells us to post in our accounts receivable account of our general ledger, right? So accounts receivable, sales, sales tax payable, and cash. So we write the journal page number in each of these accounts, cash receipts, page 11, all the way down. Column totals. Here's our column totals. We go through accounts receivable. In the credit column, we're going to write this amount. Here we go. Sales credit. In the credit column, we're going to write this amount. Here we go. It matches, right? I wish we had arrows like we did on the last slides. We calculate the new account balance. We had a debit balance. We had a credit. It's going to reduce our balance. And if you look, you can see that it did. Here, that means somebody paid off some of their accounts receivable, right? We had a credit. That means somebody gave us some money. And so then we reduced the amount that people owe us. We go through each of these, same thing. We had a credit balance. We have a credit transaction. It increased our credit balance. Here we had a credit balance. We had a credit transaction. And it increased our credit balance. And lastly, we had a debit balance. We had a debit transaction. It increased our debit amount. The very last step is we go through and we write the account number for each of these ledger accounts underneath the column that it affected to show that it's been posted.
Sorry.
That was Phoenix apologizing for riling up the dogs. This is what happens when you do these at 6 o'clock in the morning, right before you leave for work. So, oh, I'm sorry. She said boring, not sorry. She thinks this is boring, so you guys are all on board on this one. So last one is posting totals of a sales journal to a general ledger. There is something wrong with this slide. Okay, so I fixed the slide, and it said posting totals of a sales journal to a general ledger, but this looks a whole lot like a cash payments journal to me. So I just changed the heading to the slide. Anyway, I know this is going to be shocking. It's going to be a very similar process. So we write our date first. It's the 30th of the month. We know this because this says it's 30. And again, we've already totaled this journal. It's done. We're at the journal page number. Cash payments journal, page 22, CP 22. Next up is column total. And again, we did this on the 30th of the month. It was the time. This is part of our closing procedures. We totaled each of these columns. Okay, so remember that we've already posted the general columns, right? We did this already. This is something that we had said, that I think it was in 12-5 that we said we'd do. So we posted the general columns to the general ledger already. So supplies is a general ledger. Advertising expenses is a general ledger. Miscellaneous expenses is a general ledger account. These have been posted. Here's all our post refs, right? So for these, we don't actually have to post anything. They've already been posted. So we go to our accounts payable debit. That's going to be the first one we're actually going to post. There's the accounts payable, and it's going to be a debit. So we go to our accounts payable account, and we do a debit. Well, we had a credit balance. Accounts payable has a normal balance of a credit. We had a debit. It's going to reduce our accounts payable, reduce the amount of money that we owe. We know that. This came out of the cash payments journal. We paid off some of our debt. And then we do the same thing for cash, right? Now, this is a time-saving process. I know you guys are probably like, oh my gosh, this is so tedious, this is crazy. Phoenix thinks it's boring, and she's 10, and 10-year-olds think everything's cool. But this saves us a lot of time with posting. Normally, we'd have to go through and post every single one of the cash transactions, every single one of the accounts payable transactions, right? Which we really did go and post each of those. We posted them to the customers and the vendors. But we do this for the sake of time. That's part of why we do this. So cash, we have to post one time to cash instead of posting, 53 times or 16 times cash. Cash payments journal. Oh, wait, every single transaction we have would be posted to cash, right? It's not that we do one time. And it's just the total instead of each of the individual ones. We calculate the new account balance. Excuse me. We calculate the new account balance. A credit and a debit means we reduce our credit. Here we had a debit and we had a credit. We reduced the amount of our debit. And lastly, the account number. So for the ones we've already posted, we just put a check mark in parentheses. Check mark in parentheses. It's already been posted. Good to go. And we say we didn't forget about these. It's just we know they've already been done. So 2110 and 1110. Okay, that's the end of this slide, but there's one more quick thing we need to talk about that the book didn't make a slide for that perhaps I should have. There's a particular order that this company posts in. And the reason for that is because it puts the accounts almost in chronological order. There may be a couple things that are not in chronological order, but this is the order they post in. And you probably need to write this down. You post your sales journal, your purchases journal, your general journal, your cash receipts journal, and then your cash payments journal. So sales, purchases, general, cash receipts, cash payments, and it puts it in chronological order, more or less. There may be a couple, that are out of order, especially if you have lots of transactions. But for the most part, it's going to put it in chronological order, because when you go and look at your ledger, you don't want like the 1st, the 28th, the 16th, the 42nd, right? You want it to be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 through 30 or 31, or if it's February through 28. So that's why we post in this particular order. Now, another thing we should know about posting is that you always have to post at the end of the month. Why? Because all of your ledgers need to be up to date when you create your financial statements. Remember that our trial balance comes from our ledger, and so our ledger has to be up to date before we do that trial balance in order to create our financial statements. So you always post at the end of the month. Now, the customer and the vendor accounts, the subsidiary ledgers, we tend to post those periodically throughout the month. You want those to be up to date, and so those tend to get posted throughout the month. If a customer calls you and says, "Oh my gosh, my building burned down, but I know I owe you money and I just want to pay you even though my building burned down. How much do I owe you? I have no records." Well, you can go look in the ledger and say, "You owe us a grand total of X amount of dollars," right? Assuming your ledger is up to date. And you also want to know what you owe your vendors. I think I told you guys this before, but the last company I worked for, they posted about 3 times a day. So posting monthly or 2 or 3 times a month, that's really for a small business. But the business I worked for was, just massive. They were huge and they were worldwide. I think they were in something like 36 countries. So it makes sense that they would have to post 3 times a day. So at a minimum, you post once a month. Vendor and customer accounts, you typically post at least multiple times a month, at least twice a month. And then everything else, you can wait and post it once a month, and sometimes, though, it is posted more than once a month, like for all of the general ledger accounts. So subsidiary ledger accounts get posted usually 2 or more times a month, and general ledger accounts get posted at a minimum once a month, but you have the ability to do more. And I think that's everything we need to know for 12-6. So you should be ready to complete this chapter. And most importantly, you should be ready for a quiz next week. Have a great weekend.